This is VERSED, powered by Viam Capital, the podcast that brings you conversations with the leaders driving change in seniors housing and healthcare. I'm your host, Steve Kennedy, and together we'll explore the insights, challenges, and solutions shaping our industry. Well, welcome to another episode of VERSED, powered by Viam Capital. This is your host, Steve Kennedy, and I'm really pleased to have with me today Vikas Gupta. Vikas, as you may know, is the Chief Investment Officer at Omega Healthcare Investors. And previous to that, for a decade, he was Senior Vice President of Acquisitions and Development. Vikas is on the board of the NIC. ASHA is very active in our sector of seniors housing and healthcare, commercial real estate and operations. And so, Vikas, thank you for joining VERSED.
Thank you guys for having me. I'm looking forward to it.
So first of all, if you don't mind, for our listeners, just provide an overview of Omega's business and platform.
Yeah, sure. So as you may know, but I'll still elaborate, Omega is a publicly traded healthcare REIT. We own about $13 billion of assets, and it is the majority of it is skilled nursing across the U.S. But about 20% of our balance sheet is also now senior housing, which comprises assisted living, independent living, memory care, and now also a big portion of our portfolio is care homes in the UK. So that has become a larger part of our business, especially over the last couple of years. But with that said, we still think of ourselves as the leaders in the skilled space from a capital perspective, as we believe that we are the largest owner of the real estate nursing homes in the country. We structure our transactions in many different ways, but our bread and butter there tends to be triple net leases. We do that mostly for our skilled assets as well as our care home assets in the UK. But we have, over the last couple of years, started looking at different structures, including JVs, various loans, pref equity structures. As a REIT, we don't want to grow that type of structuring too large, the loan transactions. But we have been trying to take advantage of the lack of capital in the industry the last couple of years in the loan segment. But with that said, we are an owned REIT, and the majority of what we do is buy real estate.
That's great. And you talked a little bit about the diversification of the platform, not only from an asset type, but also geographically going to the UK. Do you mind talking about what prompted that diversification of the Omega platform?
Yeah, so we entered the UK in 2015. At that time, we were just in the US, and we saw an opportunity there. We're like, this is a good place to allocate some capital and partner with a good operator, very similar to what we do in the US. So we went out there, we did that transaction. We did another transaction about a year later. Then we kept learning over the next 5, 6, 7 years, did a few small transactions. But then in about 3 years ago, it exploded out there where there was such a lack of capital in the UK. And we found it to be a really good market where the operating fundamentals were excellent, the operators were good, and we could understand the business. There's a government reimbursement segment to it, there's a private pay segment to it. Really, a care home, which is a product we invest in, is like a hybrid of both. It's like a SNF and an outfall. Mm. And so once we got comfortable understanding the government reimbursement, we were confident that this is a place we can allocate capital and assist operators, similar to what we do in the US. So it was really, Steve, is a learning curve. And as we learned more and felt more comfortable, we allocated more capital. And it was at a time when there was a need for capital. So a lot of times what we say about the UK is like, it's like 20 years behind the US. We're doing sale leasebacks, we're doing different kinds of transactions out there. People there are learning and the market's evolving, but in a short form, people need capital to consolidate. And we saw there to be a good place for us to put out capital. And like today, we're looking at owning about 250 care homes with 15 operators. So that itself, we're proud of the platform we've created there.
So delving into that a little more, when you talk about governmental reimbursement in the UK, when you think of it here in the United States in the skilled nursing facility sector, you think about the federal reimbursement through Medicare for therapy and like services. You also think, of course, about Medicaid, which is driven at the state level and matched at the federal level. Is it the same type of structure in the UK, or is it a single payer that's not geographically diverse?
Yes, it is very similar, but I'm going to use some terms that kind of confuse it. It's more like Medicaid, where each care home is in a local authority, and they are getting rates set by the local authority. It's almost like a state setting their rates. So that is their one pot of money, their local authority for the government payer. The government is funding all of this, and some of it is going to the hospitals through the NHS. And that's kind of like the Medicare, if you think about it. That money doesn't touch the care homes. All one pot of money. And to be honest, there's a lot of discussions about trying to have the two groups work together better to ultimately get people out of the hospitals and into the care homes. That has not been figured out yet. So right now, again, it's all government tax money that's going back to it's a social system where everyone's paid for. But
Right.
Ultimately, the care homes are dealing with their local authorities, which is similar to a nursing home getting Medicaid from their state. There's no Medicare coming into the care home.
Sure.
As an analogy.
So getting back to the investment strategy of Omega, especially of late, can you talk about the metrics or indicators that you find most valuable when evaluating potential investments? I mean, you talk about seeing opportunity and need for capital in certain markets, but what are those metrics and indicators that you look at maybe more than others?
I always say we underwrite to three things. We underwrite to the market, the real estate, and the operator. Those are the three things we underwrite to. Now, there's a lot to each of those, but I mean, just to break them down a little bit, the markets, the state, and then even getting locally to the actual town and the demographics there. But the state also means the reimbursement environment, what's going on there. Is it a good state, bad state from a reimbursement perspective? There's a few states in the US that Omega tries to avoid just because we've either been burnt there, reimbursement's not good, it's a very political environment, et cetera, et cetera. Next comes the real estate. That means the quality of the asset itself. Is it just a piece of junk? Is it something that has a useful life still? And this also plays into it. Is it a CON state versus a non-CON state? Kind of plays into it. And then, to be honest, the operator is the most important one. Who the operator is, a lot of things. The credit behind them, what else they operate, what's their experience, what's their balance sheet look like. And then on top of that, like, do they know these markets? Do they know what they're doing? Have they turned around assets like these ones before? But that carries a lot of weight, where I'd almost rank that being the very most important item. Omega's business a lot of times comes from its current operators. I mean, we do business with 80 some operators now, and I would say about 30 of them keep bringing us recurring business over and over again, to the point where we know that they're good. We know that they know to look at the markets and the real estate in the right way, and that we can just keep on doing add-on transactions with them. So those are the main things we look at. Also, getting a little bit more granular, we have to price transactions to make money for our shareholders. So that becomes a little bit of a math exercise, is really what that becomes. It's like we're looking at our cost of capital, which is a factor of our debt and our equity. And then we're putting out money at a rate, creating a delta, which then that delta goes to our shareholders. And Omega's business is pretty simple. If you own Omega stock, you get a dividend. And that dividend is basically that delta. I get a joke a lot of times where like, Vikas, can you go lower in rate? I'm like, I actually can't go lower in rate because my cost of capital is X. I got to give you Y for us to make this worthwhile for us.
That's helpful to talk about market, to talk about the operator, to talk about real estate. You're commenting on all the factors, really. We as a capital provider, more on the debt side of things, we look at as well. As I think about Viam Capital, we're only 5 years old, but as we kind of take a step back of kind of having our flywheel turning about converting bridge to HUD permanent financing and being a GSE correspondent, we also look at our platform and we're a little heavy on the skilled nursing side. Not necessarily a bad thing, but the way the last few years have panned out as Medicaid is, rebased and cap rates they're higher for skilled nursing facilities, and seniors housing has taken in some markets a little bit longer to get back to stabilization from an occupancy perspective and a margin perspective. We've found ourselves looking at, as we grow this company, we do want some diversification. And so as I listened to you, I thought about that from Omega, your perspectives. Do you view this continued maybe diversification, a little bit more seniors housing and non-skilled exposure as something that you all think of over the next couple of years? Or are you pretty content with the current diversification of your assets?
Yeah, it's a good question. We don't have like targets for like our asset allocation. We really just want to find things at the right price. But going to your point, Steve, SNF's been hard for us to buy for several reasons. It's been all the reasons you just said with reimbursement, but couple that with the competition in the space, it's been tough. The prices per bed have gone up. They're crazy. And Omega, sometimes, we do cap out on our price per bed. And that is because sometimes the way we think about real estate investments is that even if the cash flow is there, just throwing a cap rate on it, if you get to a place like, I'm just going to use a number like 300 per bed, the problem we have, 300,000 per bed, the problem we have with that is that we start thinking you can build a new building for more than that. So we don't want to do that, especially if there's any type of overhaul of Medicaid or Medicare or something like that. But so with that said, yeah, we are looking at senior housing a bit closer to see if we can find stuff at a good price. And as those demographics kick in and those buildings fill up, then yeah, we can make a better return on those assets. I will never say that I want to stop buying skilled though. That's what we do. We love that product. We just want pricing to get back to normal a little bit is what we want, really. Not that we're competitors, Steve, but HUD financing changes things. People love HUD financing. They love to buy their own assets and take it to HUD. Omega is just another option. Sell your business to us and make some money. Now, Omega can assume HUD debt, but that's not usually how people go. They usually go one route or the other. But with that said, there's still a lot of nursing homes available in this country. And, it's just sometimes they just get gobbled up very quickly. And I think people just start looking at, if you're a large owner, you start looking at your options. And a lot of times it's like sell to a REIT or go to HUD.
Speaking about HUD and the federal government, we've talked about Medicaid and Medicare. There's been a bit of activity in DC over the last few months. And I'll be in DC tomorrow with our chief underwriter and president of HMAC, Allison Lemley, for the Mortgage Bankers Association's National Advocacy Conference. And there's a lot of stuff to talk about. And there's obviously a lot of noise. When you're in your chair, what are those those items in DC that you're taking a look at and zoning in on that could impact Omega's business one way or the other?
It's the same things you're probably talking about. It's the budget deficit and trying to fill that hole with Medicaid cuts. That's really our primary concern right now. Now, with that said, we have a whole department constantly looking into this, talking to lobbyists, talking to ACA, talking to other groups about what can and can't happen. We generally feel like the administration is very supportive of nursing homes. So in some ways, we feel very good. We also feel like we know some other places that they can make large cuts that won't affect nursing homes. But that is our primary concern right now. If for some reason they do think be it provider taxes, be it IGT, be it something that affects Medicaid rates across this country. Omega has exposure in 43 states. And that means our operators could get affected if there's cuts in any of the things I just said. We feel this administration understands our business. We feel like they've supported this industry, especially during COVID. So we feel like, they'll take the appropriate action to keep things fairly neutral for the nursing homes. But we are watching very cautiously right now.
We appreciate Omega's being on the front line of that advocacy and really telling just the story so that, folks know in DC what certain ramifications would occur with, certain cuts. So it's oftentimes that education coming from the providers as well as capital and those important industries, and including ACA and CAL. They've been a really good advocate of just making sure we can get that story out clearly, especially to new representatives who, have not been steeped in sort of these issues for many years.
Yeah, there's a lot on the table right now. There's a lot going on, and there's strategy involved on how you attack each one of these things. We've got new people getting confirmed every day. CMS revalidation information is due, which is just basically, as you may know, operators have to submit a lot of information about all their buildings. It's all due on May 1st. And Omega, we played ball. We worked with every one of our operators to get them the necessary paperwork they need on our ownership. A lot of people think this may go away. But we took the time to be like, if it doesn't go away, we have to give our operators the information they need to submit to CMS. We're trying our best. We're listening to kind of the cues we're getting from everybody of what we should do and shouldn't do. And we're trying to be supportive where we can.
Well, I think that advice, not only advice, but what you're putting into practice for your operating partners is, consistent with what we see as best practices, whether that requirement gets further delayed or, maybe ultimately is not required. At the end of the day, there's a lot of uncertainty, and not filing that recertification could have serious consequences. So we look at it from a credit perspective as a risk that needs to be mitigated for sure. One other just business related question, and then I thought I'd close with just a personal question or two. You mentioned providing debt alternatives. Can you talk a little bit about that? What type of debt alternatives can Omega provide that would be appealing to operators in the industry?
We've done a few transactions over the last couple of years where we provided a pref loan of kinds, which is kind of like a mezz loan. And it's that place in a capital stack that's above the senior. The owner or sponsor is still putting in some equity. And we are part of the JV that owns the building. And, we get a meaningful return for that. And so that's one place we played a little bit. And, to us, that does two things. It creates an opportunity for a good return for our shareholders. We're also getting to know new operators and new sponsors. And, ultimately, if they refi or they sell the asset, we could be involved with that at some point. Another structure we've done in the UK is when someone wants to buy something really quickly and regulatory approvals don't let you do it, we've given people a loan real fast so they can buy it using our loan money. But then it flips to a lease with us at basically the same basis, 100% loan. And so, again, as I said earlier, Steve, I don't want to advertise that Omega does loans, but we will do it when it makes sense for us. It won't be the lion's share of our capital allocation for a given year, but it'll be something that's meaningful in a return perspective. And more importantly, I personally just love to meet new operators. We want to know who's out there. We want people to know, okay, we gave you a pref loan for 20 million. You want to sell your portfolio one day, we're here. And, you get to know how we work and who we are.
That's a great way to sort of date before getting married sometimes.
And the truth is, we've gotten to know a lot of lenders like yourself through this process where they wouldn't have capital to do this. But we'll even go as far as to go, we'll do the senior loan, but take this out of the senior as soon as you can.
Sure.
And then we can let our pref hang out there until you go to HUD, something like that.
Now just kind of winding down with a question or two personally. You've been in Omega for over a decade. You've been in this industry for quite a while. Can you talk about a major lesson or takeaway from an investment or investment management perspective over the years?
Just to refine your numbers a little bit, I've been at Omega 15 years and I've been in this industry almost 24 years. Wow. Can't believe I'm one of those people now. Actually. So I've learned a lot of lessons, but everyone says this industry is incestual. Everyone's around, doesn't go away ever. You see the same people in a different format. One lesson I think everybody knows is just don't burn your bridges with anyone. There's a lot of people out there that come out in different places and I think said differently, create allies where you can, because ultimately that can help you. A lot of what we've done over the years is we've taken risks for our operators that has created a win-win situation for us. And then people remember that when there's a slam dunk. And they're like, let's do it with Omega. It's easier to do with them. They stepped up for us when times were tough. So we really try to be that capital allocator where we are relationship driven many times. But then at the same time, I think that comes back to us where operators try to take care of us too. Where they're like, we could save a point or two and go here. But Omega just is always there for us. Sounds cliche, but customer service can go a long way. And relationships can go a long way. I've been fortunate in my career where I am, but I take a lot of phone calls myself and I talk to a lot of people myself. I think people appreciate that. I've taken on the CIO role over the last couple of months and people are like, what are you doing different? I'm like, no, it's a lot of the same stuff. I'm on the phone on this all day long. And maybe it's because I'm a deal junkie. Maybe it's because I enjoy it, but I also think it pays off for us a little bit.
It may sound a little cliche, but customer service and relationships and direct relationships are what it's all about. And it is a bit of an incestual industry. And I think that's really good advice, especially for, people coming up in the industry, is creating allies and not burning bridges. And I appreciate you saying that. We'll close with something, we ask every guest. If you have a recommendation for a book or podcast, we would welcome it.
My wife would be so happy to hear you ask me that question because she's going to say, all you read is industry stuff in emails. And I should go on to a TV show instead. How's that? Can I go to?
Would love it. You'd be the first one to recommend.
Well, this just shows you how I've been working too much and haven't read anything lately good. I watched an awesome show on Hulu called Paradise. It was really fun. little sci-fi show. It was great.
Nice.
Finished it last night. I really enjoyed it. So I'd recommend it to people. It's a little sci-fi, a little political, and
Okay.
it's a fun show. My wife would love this question because she's like, all you do is read emails all night long. Why you should be reading a book, you know?
Well, Vikas, we really appreciate you being a guest on Versed, and we'll look forward to seeing you around very soon. So thank you so much.
Yeah, and Steve, thanks to you and the whole Viam family for putting this together. It's nice, and I'm looking forward to listening to other speakers.
Thanks, Vikas. Thanks for tuning into Versed, powered by Viam Capital. The conversation doesn't stop here. Let us know what topics you want to hear, and let's make an impact in healthcare and seniors housing together. Till next time, I'm your host, Steve Kennedy, and this is Versed.